Welcome to the Deep Dive. We are jumping straight into the latest from Oklo Inc, that's ticker Oklo, covering their Q3 2025 earnings call.
And this is a really fascinating one. You have this company at the intersection of, huge federal support and just this absolutely desperate demand for power from data centers.
Exactly. So the mission for you, our listener, is to look past the headline numbers. There were some misses for sure.
Oh, yeah.
But we need to dig into how management is using their huge cash position to really accelerate their timeline and, frankly, de-risk the whole path to getting these advanced reactors online.
That's it. This call was way less about the Q3 numbers and much, much more about their execution path going forward.
Okay, so let's get that surface level stuff out of the way right now. The numbers basically show a company that is spending aggressively but is still, fundamentally pre-revenue.
Precisely. The headline GAAP EPS.
The generally accepted accounting principles.
Right. That came in at a loss of 20 cents per share. That missed the consensus by about, 7 cents?
7 cents, yeah. And revenue, of course, was zero.
Expected. And the net loss was around $29.7 million. That's all driven by operating expenses hitting $36.3 million. That's the spend on engineering, procurement, all the licensing work.
And the market reaction was, a little soft on that loss. The stock dipped about 2% after hours.
It did, but in this kind of pre-revenue, capital-heavy industry, you have to immediately look at the balance sheet.
And that's where the whole story just flips on its head.
It really does. They completed a major capital raise, bringing in $540 million in gross proceeds. So they ended the quarter with an absolutely staggering balance of around $1.22 billion in cash and marketable securities.
$1.22 billion. That is the financial bedrock, right? That underpins everything. It gives them the runway to absorb this burn rate and just execute.
It separates them from so many other concepts out there that are just constantly trying to find funding.
So, okay, the market saw that cash. How did management immediately pivot the conversation away from the loss and back to the future?
They went straight to execution. It was all about milestones, physical progress, and, this is the big one, a regulatory strategy that completely changes the game on how fast they can move.
Okay, let's unpack that. The regulatory shift. Because for anyone following advanced nuclear, this is probably the biggest piece of news this quarter.
It is.
Historically, you needed a full NRC combined license, a KOLA, which takes years before you could even think about pouring concrete. How is this new DOE pathway getting around that?
So this is the brilliant part. They're using the Department of Energy structure. Oklo was selected for 3 awards in the DOE's Reactor Pilot Program, or RPP. And this isn't just money.
It's a pathway.
It's an authorization pathway. The key insight is they no longer have to wait for that entire long upfront NRC process to be 100% done before they can start building.
So you're saying they can run construction, which used to happen after licensing, at the same time?
Exactly. They can build and license in parallel. The DOE, especially at Idaho National Lab, has decades of history with sodium-cooled fast reactors like the EBR-2, which is the basis for Oklo's Aurora.
Right.
So by operating that first reactor under the DOE's oversight, they can build, they can test, all while the NRC commercial licensing process is happening for the plants that will follow.
That just vaporizes years of what used to be dead time, just waiting for paperwork.
Idle time. Gone. And they reiterated their confidence because of this. They're still targeting late 2027 to early 2028 for that first Aurora INL plant to be operational.
And they're not waiting. I mean, we're seeing physical work starting at the INL site already.
That's the proof. Groundbreaking happened. They started moving earth in October 2025, and they're aiming for full excavation by early January 2026. This is real progress. It's dirt moving.
And what about the supply chain? Getting the big components is always a huge bottleneck.
Another big de-risking move. They've secured contracts for all the major long lead components. We're talking sodium pumps, the reactor trip system, fuel assembly nozzles.
So they've locked in fabrication slots.
Slots and, crucially, pricing. That's a massive hedge against the inflation risk that can kill these kinds of projects.
Okay, so that sets the stage. Execution is moving. But the trickiest, riskiest part of the nuclear world right now is fuel. HEU, high assay, low enriched uranium is a mess.
It is. It's the $1.22 billion question, isn't it?
Yeah.
And management was very direct. They acknowledged the HELEU market is volatile.
Geopolitics, tariffs, you name it.
Right. So their answer is this really interesting 3-pillar vertically integrated fuel strategy. It's all about control.
Let's start with the long-term vision, the recycling part.
Pillar 1 is the Tennessee Advanced Fuel Center. This was a huge announcement, an investment of up to $1.68 billion. This will be the first privately funded recycling facility of its kind in the entire U.S.
And the goal of that facility in Oak Ridge?
Control and sustainability. They'll take used fuel from our current fleet of reactors, which still has something like 95% of its usable energy left in it, and convert that into new metal fuel for their own fast reactors.
Yeah.
It creates a closed fuel cycle. That's a long-term play for the 2030s and beyond.
Okay, so recycling is the 2030s plan. But what about now? For the first plans for these data center deals they want to sign, this is where their strategy gets really, really unique.
This is Pillar 2, the near-term federal bridge fuel. And this, I think, was the game changer on the call. The U.S. government is making up to 20 tons of legacy defense plutonium available.
Plutonium?
Yeah, and this is material that was basically a taxpayer liability. It was going to cost billions just to dilute it and dispose of it.
So 20 tons. What does that translate to in terms of actual fuel for their reactors? Give us the aha moment here.
The math is just stunning. The 20 tons of plutonium gets blended with unenriched uranium, so you skip the whole expensive enrichment process, to create about 180 metric tons of Aurora fuel.
180 metric tons, that is an enormous amount of fuel. Why is plutonium so much more efficient in their specific reactor design?
It's the physics of a fast reactor. They use high-speed, fast neutrons, and they're just inherently better at burning fuels like plutonium. The management put it this way: a fuel that is about 11% plutonium performs like a 19 or 20% HALEU fuel.
So you need less of it to get the same power.
Way less. It's just a superior fuel source for their architecture. So with this one move, leveraging this government material, they completely sidestep the entire HALEU supply crunch for their first fleet.
For their first 10 to 20 plants, you said.
Exactly. It's guaranteed enrichment-free fuel. It just accelerates everything. And it's a great story, right? You're turning a government liability into a national energy asset.
And the third pillar has to be fabrication, right? You need a factory to actually make the fuel rods.
Absolutely. Pillar 3. They were selected for the DOE's Advanced Nuclear Fuel Line pilot program to accelerate domestic fabrication. They got their initial safety design approval for their facility in under 2 weeks.
2 weeks.
Yeah. Again, it just shows how these DOE pathways are cutting through the red tape.
Okay, let's switch gears a bit to their other businesses, specifically atomic alchemy. For a pre-revenue company, investors are always looking for some near-term cash flow.
And atomic alchemy is their play for that. It leverages their core skills to produce high-value radioisotopes for healthcare, defense. These are things the world is really short on.
Right.
Their pilot plan for that, which uses a different reactor called Viper, was also selected for the RPP. They're targeting it to be operational by mid-2026.
But they mentioned something even sooner than that, right? Something that could bring in revenue even earlier.
They did. They're working on a separate, much smaller lab-scale facility. And that lab could generate early revenue and, importantly, gross margin in the first half of 2026.
So maybe single-digit millions, but it's proof.
It's proof of monetization. It gives investors something real to track while the bigger Aurora plants are being built.
And what about internationally? Are we seeing external confidence in this plan?
We are. Momentum is strong. They signed new deals with European companies, Nucleo and Nucleo. The Nucleo partnership is the one to watch.
Why that one?
It's focused on building out the U.S. fuel fabrication infrastructure, and it comes with a potential investment of up to $2 billion through an affiliated vehicle.
$2 billion. That's a massive vote of confidence from a third party.
It is. It says they believe in this whole vertical integration strategy.
And the customer pipeline, the demand from data centers is the tailwind pushing all of this.
That pipeline is still sitting at a massive 14 gigawatts. That's 14,000 megawatts. And it's almost all data centers and hyperscalers.
And they're actively working that pipeline.
Yeah, management said they're exchanging term sheets, looking at creative deals like customer prepayments for power or even for the fuel itself.
Which is huge. Those prepayments mean they could finance future plants using customer money, not just their own cash.
Exactly. It turns a pipeline into a finance deployment plan. And having that guaranteed plutonium fuel makes those conversations with urgent customers like data centers so much easier.
So if you step back and look at the big picture, this call really feels like a turning point. They have the money, and now they're shifting from trading on the concept of advanced nuclear to demanding an execution premium.
That's a great way to put it. The whole narrative is now about de-risking. The cash de-risks the balance sheet. The DOE pathway de-risks the timeline. And the plutonium bridge fuel that de-risks the supply chain.
It makes those first 10 to 20 plants feel so much more real than they did just 6 months ago.
Definitely.
So what are the key things we need to be watching for now?
Well, first, we need to see that 14 gigawatt pipeline convert into actual signed power purchase agreements, firm deals.
Right, pen to paper.
Second, the coordination between the DOE and the NRC for the eventual commercial transition. The first plant is on an accelerated path, but they have to prove that path works for the whole fleet. And finally, just managing costs. Inflation is still a risk for any big construction project.
But the macro environment couldn't be better for them. Federal funding is ramping up, and the data center power demand is just relentless.
It's accelerating faster than anyone thought possible. The need for clean, reliable 247 power is just insatiable.
All right, it is time for the segment we call This Is Not Financial Advice. We're going to pitch an outrageous but plausible trade idea based on what we've just covered.
Okay, so the core idea here is that we think the market is still seriously underpricing the impact of two things. That DOE acceleration and, more importantly, the confidence that comes from having 180 metric tons of guaranteed enrichment-free fuel.
The premise is that fuel supply is everything. Having that fuel in the bag completely changes the commercial timeline, especially for those data center customers who just can't afford to wait.
So we're betting on a massive re-rating of the stock, from a concept to an execution story.
Okay, so what's the trade?
The outrageous but plausible idea is a highly bullish medium-term option strategy, specifically buying deep out-of-the-money call options that expire around mid-2026.
And the catalyst for that?
It's a combination. You have the Atomic Alchemy Lab potentially generating its first revenue in the first half of 2026. But the real kicker is the accelerated conversion of a big piece of that 14 gigawatt pipeline into firm PPAs, way sooner than the market expects.
Because the guaranteed fuel gives them the confidence to sign.
Exactly. The plutonium is the weaponized catalyst for the commercial breakthrough. It's a bet on them signing a huge data center deal that forces the market to wake up.
A bet on strategic execution, unlocking those contracts ahead of schedule. I like it.
It's a bet that using a legacy defense asset to solve a modern energy crisis is a winning strategy.
Okay, so to recap the key takeaways here. Oklo has secured its financial runway with a massive capital raise.
Check.
They've completely changed their regulatory strategy, using the DOE to build and license in parallel, locking in that late 2027, early 2028 timeline.
And they've unveiled this brilliant vertically integrated fuel strategy anchored by the recycling plant and that game-changing plutonium bridge fuel.
That integration of legacy defense material, the plutonium with a modern reactor design is really the heart of it. It solves the biggest problem and turns a multi-billion-dollar taxpayer liability into a huge national energy asset.
It's incredible. It's enough fuel for up to 20 powerhouses right out of gate.
Which brings us to our final provocative thought for you to chew on. Will this model of total vertical integration controlling the fuel, the licensing, the operation, will that become the only real way to scale advanced nuclear in the U.S.?
And a follow-up to that, if this parallel DOE-NRC pathway works for Oklo, how fast will every other advanced reactor company have to try and copy it just to keep up in the race to meet this energy demand?
A powerful thought to end on. That's all the time we have for this deep dive into Oklo Inc. Thanks for tuning in.